Hello once again, guys. Welcome back to the channel. I hope you're having a great day so far. So I have been more excited about this video than I have been for a video in a while. And that is because this is going to be another one of my ultimate guide videos. So about a year ago, I did a massive video called Stock Market for Beginners that came in at over 3 hours long. If you haven't seen it already, I'll go ahead and put a card up in the corner, and I wanted to be sure that I put together one of these ultimate guide style videos at least once per year. So this right here is going to be the ultimate guide to gold investing for beginners. As always, guys, there is going to be a table of contents down in the description below should you want to skip ahead or skip backwards at any point in time. However, I would definitely recommend, watching this video in entirety. We are going to move at a pretty quick pace once we get into things here. Also, guys, this video is clearly going to be another marathon video, so make sure you go ahead and grab yourself a beverage and maybe a snack if you need it. Also, make sure you turn off any distractions around you. If you're watching this on your computer, put your phone on silence and definitely commit to this entire video. And as a result of doing that, I'll be answering any and all questions that you have related to gold investing. Also, I would definitely recommend bookmarking this video just in case you lose track of it and you want to come back to it later on. Also, if you don't finish the entire video, what I would recommend doing is leaving a comment down below with the timestamp of where you left off. And then when you end up coming back to this video, you can just do a Control F search, type in the name of your channel or your personal name associated with your Google account, and you'll be able to find that timestamp and jump right back in. That being said, guys, we are ready for liftoff, so let's jump right into the presentation. Okay, guys, so here we are with Investing in Gold for Beginners, a step-by-step investing guide. So with inflation in the United States at a 40-year high, as of data that was literally released this morning, I thought it made sense to provide an in-depth overview on gold. But first of all, we're going to start off here with the history of gold. So gold was known to be a finite resource as early as 1600 BC. Given its rarity, gold quickly took its place as a status symbol and eventually became a means of exchange. And you can see, looking at this chart right here, we're looking at the gold price from around 1974 all the way to today. So as you can see, gold had a run up in the late 1970s, and then it had a bit of a bust cycle that continued up until somewhere around 2000. But in the 2000s, we saw a very quick, rapid appreciation there of the gold price, and then it sold off again somewhere around, most likely looking like the 2008 financial recession. But since then, we have seen more interest in gold, and prices have gone up since around 2008 to 2010. Now, gold was generally used for a couple thousand years solely to create things such as jewelry and idols that were used for worship. Until around 1500 BC, which is when the ancient empire of Egypt made gold the first official medium of exchange for international trade. Since then, countries have used gold as a form of currency to trade for food, tools, and other kinds of resources, and it backed every US dollar in circulation until 1933. It's a year that probably most of us are, remembering, related to a major financial event. This was after the Great Depression. So now, why exactly is gold valuable? Well, the metal is abundant enough to create coins, but has rarity in that not everyone can produce it. Also, unlike gold, water can be seen as something, as an example, that everybody has, which then diminishes the actual value. Not everyone in the world can actually find physical gold, and that's what gives it luxury and a greater cost. And so it's this overall rarity of this metal coupled with the demand that determines the overall price, which affects other currency markets. And this, of course, all comes down to the basic principles of supply and demand. So gold is scarce and requires significant resources to mine and then refine into a usable product. Since around 600 BC, gold has been used as a store of value and a means of exchange. And this is a pretty wild fact right here, guys. It's been estimated that the total amount of gold mined, which is now close to 166,500 tons, could fit into 3 Olympic-sized pools. Now, you might think that's a lot of gold, or you might think that's not too much at all, seeing as the entire global population is competing for this resource. Now, as far as modern-day demand for gold, it basically splits off into 4 different categories. Number 1 is jewelry. Number 2 is governments, or in particular, central banks. Number 3 is in industry or industrial uses, and then number 4 is private investment. So now let's talk more about the actual supply of gold out there. So mining production usually accounts for 75% or the largest part of the gold supply, and that makes sense. These are the individuals and companies that are mining the gold out of the ground. However, gold mining and its associated activities do not collectively respond to price changes quickly. Recycling of gold is actually the true source of the gold supply that is most responsive to the price of gold and shocks in the economy. So around 90%, the majority of recycled gold comes from jewelry, with gold extracted from technology products providing the remaining 10%. So now more on the demand side for gold. Well, since the early 1970s, the volume of gold produced each year has tripled. However, just as fast as that supply or production of gold grew, the demand grew even quicker. The amount of gold bought annually has quadrupled, and gold markets have flourished across the globe. Gold is now bought by a far more diverse set of consumers and investors than any previous time in history. Now, when you look at the demand for gold on a worldwide scale, things become very interesting. Over the last decade, demand for gold has largely moved east. Now, this has overall been a result of many different economic factors, including income growth, wealth creation, and cultural affinity. Now, you might be asking yourself whether or not I actually have an investment in gold, and the answer is yes, I do. So I currently have an investment in gold through the cryptocurrency known as PAXG, and I pretty much just do this for ease of exposure. But the reasons why I own this gold are going to be shown later on in this presentation when we get into a lot of the reasons why people like me hold on to gold in the first place. But I did just want to tell you guys and show you that I am, putting my money where my mouth is, and I do have a sizable investment in gold. Now, I have borrowed against this gold and used that money towards my house flip down here in Florida, but through this, I currently have exposure to roughly 26 ounces of gold. So now that moves us on to our sponsor for this video, which is none other than OneGold. So historically speaking, gold and silver investments have proven cumbersome with high fees and liquidity obstacles. And for those who aren't familiar, liquidity is simply how easily an asset can be converted back into cash. So basically, in the past, it's been difficult to get your money in and out of gold with relative ease. OneGold is one of these companies aiming to solve that problem. Now, OneGold was launched by industry leaders in the gold industry, and OneGold provides ownership of gold, silver, and platinum in your choice of secure vaults around the globe with the ability to trade it 24/7. And this is all done at ultra low costs through a best-in-class mobile app or desktop experience. And later on in the video, we're going to be checking out the app and seeing what it has to offer. So moving on now, let's talk about why investors like gold. Well, historically, investors have allocated a portion of their portfolio to precious metals in order to mitigate risk. Gold is known as a hedge against inflation, which, as we mentioned earlier, is a key buzzword these days, as well as other market-driven risks. Now, billionaire investors such as Ray Dalio, Warren Buffett, Elon Musk, and others have dedicated a portion of their portfolio or corporate assets to gold. And here's a quote here from Ray Dalio. He's one of my favorite people to follow in terms of people who know a lot about the markets. He has a lot of great videos and concepts that I really enjoy watching in my downtime. But anyway, what he said here is, if you don't own gold, you know neither history nor economics. And if you know anything about Ray Dalio, he's a big fan of looking backwards to predict the future. So just a really interesting quote there from Ray Dalio to share. So beyond that, what are some of the other reasons that investors may own gold? So number one, gold tends to maintain its value when compared to other assets out there. So looking at data since the 1930s, the dollar has lost more than 90% of its value against the value of gold. Reason number two, negative real interest rates. So real yields have been pushing more negative as nominal rates decline and inflation runs hot. So if, for example, at this point in time, really, you'd have to be kind of crazy to be involved in the bond market, especially US Treasuries, because yields are so low and inflations are so high that your real interest rate is going to be negative by multiple percentages. So that means that, a lot of US Treasuries and different bonds out there are, at this point in time, actually a guaranteed way to lose money based on the deterioration of that purchasing power, largely from inflation. Reason number three here was another big buzzword over the last few years, and that is quantitative easing. So we have seen that the M2 money supply increased by 33% in 2021, and this was the largest increase since 1943. So that's a pretty scary fact here, that 33% of all of the money supply out there was printed in 2021. Just go ahead and let that sink in for a little bit. And, then we may not be as surprised when we're seeing, inflation as high as it is right now, coming in at 7%. In addition here, the Fed has injected over $11 trillion into the market over the past 18 months, mostly into the bond market, but nonetheless, all of that money being pushed into the economy does certainly have consequences, and many of us are becoming aware of that now, or maybe we were, many months ago and just people didn't want to listen. And right here, guys, is the chart of the growth of the M2 money supply, and you can just see where that absolutely skyrocketed here after the global pandemic. So reason number four as to why investors like gold is because of debt and deficits. So the US national debt is currently approaching $30 trillion. And if you've never seen it before, there's a pretty cool calculator, or it might not be cool depending on how you look at it, but you can Google US debt calculator and it shows you updating every couple of seconds the total of US debts, and then, reasonably how much each citizen would owe if we were ever to, pay back that debt. However, if you study these things, you then realize that it's actually impossible for us to even pay that debt back in the first place without totally crashing the economy. So in addition to the national debt approaching $30 trillion, the federal government is running on an unprecedented deficit. Historically, money printing in response to debt issues has not ended well. And a deficit is obviously where they don't have enough money coming in and they have way more money going out. So moving on now, let's talk a bit more about inflation. So as of December, US inflation rose to 6.8% year over year, and this marks the highest inflation in over 40 years. Now, as mentioned earlier, historically, gold has been viewed as a natural hedge against inflation. According to the World Gold Council, in years since the United States left the gold standard, gold has averaged returns of 14% in years where US inflation is at or greater than 5%. Now let's cover how to actually make money with gold, because it's a lot different than other investments out there. First of all, gold is non-yield bearing. So in order to make money with gold, the asset itself must appreciate beyond the price in which you purchased it for. So it's not like a dividend stock out there where you can hold on to it and earn a yield or return through dividends. It has to be purchased and then sold for a greater price down the road, something known as asset appreciation. Second of all, gold acts more as a means of insurance and also protects you from downside. So rather than having gold as a speculative asset, many investors choose to dollar cost average into a position over time. Now, if you're interested in doing that, OneGold's Auto Invest tool allows you to do exactly that, investing on a recurring schedule into gold or other precious metals on the platform on a scheduled automatic basis, allowing you to take advantage of a strategy of dollar cost averaging. So now let's get into more details here about gold returns. So gold is viewed by many to be a defensive asset compared with other assets with higher volatility and potentially higher returns. However, typically with a defensive asset, you would expect to see lackluster returns, but that hasn't actually been the case here with gold. Gold returns significantly outpaced that of major US stock indices such as the S&P 500 for the first 18 years of this century. But what exactly happens to gold and gold prices during a recession? Well, technically speaking, a recession can be defined as multiple consecutive months of declining economic activity. Now, gold is often expected to perform better in periods of recessions and uncertainty. Now, this is by no means a guarantee, but it has been the case more often than not. And all we can basically do is look back at history and look at how gold has behaved under a variety of different economic factors. Now, since gold is looked at as this sort of safe haven asset, a lot of people will flee the stock market and bond market, or maybe the real estate market if they have liquidity, and move that money over to gold during times of uncertainty. As a result, gold has seen significant returns amid most of the United States recessions, and some of the more recent recessions provide a good example to look at. So first of all, how about the most recent recession that we just had? Gold returned over 20% in the year 2020, while shutdowns related to the global pandemic pushed the United States into a recessionary period. Interestingly enough, we saw something similar happen back in 2008, around the time of the financial crisis. In the months preceding the housing market crash, starting in November of 2007 and ending in November of 2009, the S&P 500 index fell over 25%, while gold prices gained nearly 30%. So while people in the stock market lost 25, gold investors gained 30. And then for a visual example going back even further, this chart does not incorporate obviously the two most recent recessions, but what you can see here is the red line is the gold price per ounce, and the recession periods are represented with those gray bars. And what you can see here is that during most of these recessionary periods, certainly not all of them, but most, gold prices went up during a recession or shortly thereafter. So now let's talk about long-term versus short-term investing and how that relates back to gold. Well, investing expert Warren Buffett famously stated that his preferred time to hold on to a stock is forever. And we certainly know this to be the case because some of his investments, like American Express, date back as far as the 1960s. One thing that is for certain here, though, is that gold has historically delivered solid returns on a long-term basis. Short-term gold investing allows the investor to turn profits more quickly, and short-term investing in this manner also opens up the option of using leverage to maximize your investment dollars. Now, if you know anything about me here, guys, I'm not a fan of using leverage or margin at all to do additional investments. But what I am doing is just kind of trying to cover everything here just so you are aware of the different avenues for investing in gold and that some people do make short-term investments utilizing margin. So now let's talk about gold diversification if you're looking to make this a percentage allocation of your overall portfolio. So investors often balance between high volatility and high risks or low volatility and low risk. Using the last 50 years of data and looking at 10-year average returns, it's possible to have almost the return of a 100% stock portfolio with less volatility than a 100% bond portfolio by holding a mix of 80% in the S&P 500 and 20% in gold. Now, if you don't know much about financial markets, I will tell you that is extremely impressive because stocks are seen as a much more volatile asset and bonds have traditionally traditionally very little volatility. And volatility is simply the up and down price movements. So basically, in the past, having gold in your portfolio could minimize some of the volatility associated with your investments. And then here we have a comparison chart looking at the S&P 500 versus the gold price per ounce from 2017 to 2018. Now, obviously, guys, as you can see here, the red line being the S&P 500, you can see where it did outpace gold prices, but then in about October of 2018, the market obviously had a bit of a correction and then came down below the return here that gold was seeing. So now moving on here, let's talk about gold versus silver, as there's typically this argument here of which one is better, and you have a lot of people on both sides of it. To tell you the truth, you probably would want to incorporate both into a well-rounded portfolio, but let's get into the details a bit more. So like gold, silver is a precious metal that garners much of its demand from investors. However, in addition to that, silver also has a wide and growing industrial application, which can also drive prices higher as well. Silver is used in the production of mobile phones, automobiles, computers, appliances, electric vehicles, solar panels, and more. In fact, in 2021, silver demand exceeded 1 billion ounces. So given all of those characteristics and also the fact that it is quite a bit cheaper per ounce, many view silver as a higher beta version of gold. Now, another thing interesting to note here is that once it's used, industrial silver is usually not recyclable. The CPM Group estimates that nearly half of the world's above-ground silver has already been used in industry or is currently, believe it or not, sitting in landfills. And that is largely due to the fact that silver is far more affordable than gold, so the cost effectiveness of recycling is a lot less. So currently, you can buy around 79 ounces of silver for every 1 ounce of gold. Now, this is commonly referred to as the gold to silver ratio, in which you can track the price of silver relative to the price of gold. Now, while we've seen historically that gold and silver prices often follow a similar trajectory, silver tends to be more volatile. And you can see this pretty clearly here looking at gold versus silver prices in this 10-year period. Gold is obviously the gold line and silver is the blue line, and you can see where the prices have gone up and down quite a bit more with silver compared to with gold. Okay guys, so moving on now, let's talk about gold versus platinum, seeing as these are two precious metals that a lot of people look to invest in. So first of all, in terms of rarity, platinum takes advantage over gold as it is actually 30 times rarer. So for comparison's sake here, guys, every single year, approximately 1,500 tons of gold are mined, whereas in comparison, only about 160 tons of platinum are mined. Now, if you are somebody who is looking to invest in platinum, OneGold is one of the few platforms out there that provide a vaulted solution for platinum, which basically means you can take ownership of it and, capitalize on the price moves without directly holding on to the platinum. Instead, that metal is stored safely inside of a vault. Now, this is especially important given physical platinum's premiums, which are often $200 to $300 an ounce, and that would be the amount that you're paying above the current spot price. So that could be quite a bit of money that is thrown into premiums if you are taking physical possession of your platinum. So as a result here, the OneGold Platinum option is an efficient means of direct platinum exposure without paying any kind of crazy premium. And if you're curious about the performance of these two metals, here is a chart here showing the price of gold compared to the price of platinum from around 2000 all the way up until middle of 2014. Now overall in that time period, we can see that clearly gold had a better return than platinum, but both of these metals here did have solid returns. Moving on here, this one is going to be quite popular with my audience here, and that is gold investing versus investing in the stock market. So gold has actually outperformed the S&P 500 since the year 2000, and investors often choose to hold gold to try and offset risk associated with stock market volatility. So one of the number one problems with investing heavily into the stock market is all of those crazy up and down price swings. And this type of diversification makes sense because given that gold has historically carried somewhat of an inverse relationship to major stock indexes, you typically see this as the case. However, that has not actually been the case in the last several years. So if you look at this chart here comparing gold prices versus the S&P 500, you can see where at times the stock market certainly did outperform gold prices, but going on further down here towards where it was the financial crisis in 2008, you can see where the blue line there, the stock market had a massive sell-off, but during that same period, gold prices actually rallied. So people who held gold during the 2008 financial crisis ended up making money, while those invested, solely into the stock market lost a ton of money. Moving on, let's talk about gold versus crypto investing, because a lot of crypto investors draw comparisons between cryptocurrencies such as Bitcoin to the, characteristics associated with physical gold. So the gold versus crypto conversation often becomes a debate on which one of these assets belong in a portfolio over the other. But you should also consider that it doesn't necessarily have to be just one way or the other. In fact, it might make sense to hold on to both, and that's what I do personally. So most often we hear about gold being compared to Bitcoin, along with data points supporting one side of the argument over the other. While these assets have some things in common, I would contend that, as mentioned, both should belong in a well-diversified portfolio. So here's a couple of my thoughts on this conversation of gold versus cryptocurrencies. Well, first of all, we have seen greater upside with cryptocurrencies in recent years. However, we've also learned that that comes with significant volatility, and honestly, the crypto markets are some of the most volatile markets out there. Not to mention, there's a huge difference between how long gold has been used as a store of value versus using cryptocurrencies like Bitcoin. So Bitcoin has only been around for roughly 12 years, and that's how much price data we have, whereas with gold, it has been around for over 5,000 years. So in terms of being a time-tested asset, gold absolutely blows cryptocurrencies right out of the water. I think that both of these assets have their own set use cases. However, evident by this volatility here, I would say that we should view the cryptocurrency markets as far more speculative. Whereas gold, on the other hand, is still viewed as more of one of these safe haven assets. Not to mention, gold is something that a lot of people are comfortable investing into, whereas there's many people out there that are still on the fence about whether or not they want to invest in cryptocurrencies, largely based on a lack of understanding of the asset. So for those reasons, I think we are still going to see it be the case where gold is viewed as more of this safe haven asset versus cryptocurrency. And not to mention, during the last recession in 2020, cryptocurrency prices, including Bitcoin, absolutely tanked. So that whole argument as far as this being, a inverse relationship to the stock market and similar to gold was also largely blown out of the water. In the future, I think it is possible for Bitcoin to have a similar inverse relationship to the stock market, similar to what we have seen with gold historically, but we have to realize the reality that that is just not the case today. So the main point I'm trying to make here, guys, is it's not necessarily an argument of which one belongs in your portfolio over the other. As I said, in most cases, I think it makes sense to hold on to both, so it should be more of a discussion or decision on how much of each you include in your overall portfolio mix. And then if we take a look at this chart here comparing gold prices versus Bitcoin, it's actually kind of a silly comparison, because when you look at this very short period of time that Bitcoin has been around versus gold prices, and again, this is only dating back to the 1970s. So you can see where obviously returns with Bitcoin have been better in terms of that short term of when Bitcoin officially came out, but it has certainly not been around for nearly as long as gold, not even close. And so as a result, it's sort of difficult to make conclusions or draw conclusions about it this early on. So moving on now, let's discuss the different avenues for investing in gold, because a lot of people are not even aware of the many different ways that you can have exposure to gold. So there's primarily 5 different ways that people invest in gold. Number 1 is physical metals such as coins, bars, jewelry, etc. Number 2 is gold investing platforms just like OneGold. Number 3 is investing in gold ETFs or exchange traded funds that trade on the major exchanges. Number 4 is the gold futures market. And then number 5 is investing in any mining related stocks. Now, the good thing about investing in gold versus other assets out there is you have a very diverse and accommodating range of investment options. So it allows you to gain exposure to gold, whether or not you're trying to invest $50 versus, $50,000. So starting off here, let's talk about number 1, which is investing in physical metals. Well, as one might expect, this involves buying and holding on to physical amounts of one or more precious metals. Generally, this is going to be in the form of rounds, coins, or bars. Now, in the past, I have actually purchased physical precious metals through APMEX, and this is a really solid option for buying physical metals. APMEX is the largest dealer in the United States with more than 40% of the physical retail market share, so they're really the biggest, most dominant player in the physical metals space. APMEX has been in business for over 20 years, and they've done more than $13 billion in sales, so they are very much well trusted when it comes to purchasing precious metals. But of course, there's going to be pros and cons with each of these investments, so let's start off by talking about the pros of investing in physical metals. Well, first of all, this is giving you assets that are off the grid / out of the financial system. So there's a lot of people out there who are, doomsday preppers, or they're sort of, worried that the sky is falling. And some of these people I actually would tend to agree with some of these things going on in the world. So I certainly also have some off the grid assets. I'm not going to speak too much about them because that sort of defeats the point of them being off the grid. But the idea here is you can take physical metals and potentially use it as bug out money where, if you have to get out of the given area, you can pack up your metals and go. The benefit here is that as long as you don't tell anybody, nobody is going to know that you own it. And so that keeps it out of the eyes of potential surveillance of your assets as well. In addition, physical metals can't be hacked like digital holdings, which is something to consider as well. Next, there's no counterparty or bankruptcy risk because you yourself are the custodian of your physical metals. You're not trusting or relying on anybody else. In addition, this can easily then be passed from generation to generation, and inheritance tax is self-reported, so that's sort of up to you as to whether or not you would disclose that, but, based on doing things by the books, you definitely ought to. In addition, capital gains from buying and selling physical metals is also self-reported, and a lot of this is handled as completely cash transactions. So again, you can do with that information what you wish, but do keep in mind that you should report all of this and, pay your fair share of taxes. In addition, there is no need for a brokerage account or online account, and there is over 5,000 years of history of, preserving value through physical metals, meaning that this asset cannot go to zero. Now, that being said, here are the cons associated with taking possession of physical metals. Number 1, there are thousands of different products available, and this can really be confusing and overwhelming to new investors. Second of all of these different products are going to have different premiums and spreads, which are going to be basically costs associated with investing in these precious metals, and that again is also very confusing often to newer investors. There's also the risk of theft or potentially, believe it or not remembering where you put it. You're also subject to sales tax with the purchase of physical metals, so that should be considered as well. In addition, if you are looking to purchase physical metals and you don't want to do it online with APMEX, you are going to need to find a reputable and trusted gold or metal dealer. You're also going to need to figure out out a storage solution on your own, which may involve going out and purchasing a safe or a safety deposit box, or figuring out a very secure hiding spot. Lastly, unless you have some insurance policy on your precious metals yourself, which most people are not going to, you don't actually have any insurance against, potential theft of these metals if somebody were to figure out where you have them stored. So as a result of many of those caveats associated with holding precious metals, most people will instead seek to invest via an online investing platform. So investing in physical gold can be challenging for investors who are more accustomed to trading stocks and bonds online or right from an app on their phone. When most people think about investing in gold, they typically think of bullion, and that is those big shiny bars locked away in the vault. Well, gold bullion comes in bars ranging from a few grams all the way up to 400 ounces, but it's most commonly available as 1 and 10 ounce bars. Now, that may become an issue in terms of the physical divisibility of this asset, because unlike stocks, there's no real way to get a fractional share of a physical gold bar. So as a result, this might leave things out of reach for you if your only option is to go out and purchase, an entire whole ounce of silver, because you might not have that much cash on hand to invest that money. So what are the pros associated with buying gold through an online investing platform? Well, first of all, you have direct title and ownership of precious metals, and at least in the case of OneGold, these assets are stored completely separate from company assets, and it does not appear on OneGold's balance sheet. In addition, you can rest assured knowing these are 100% backed metal positions, and the metal is only sold if it is physically available in a vault. So at least with OneGold, you don't have to worry about somebody selling you gold that may not actually be there. In addition, with investing platforms, you're often going to find more attractive premiums than when compared with physical metals. So me personally, I have found it to be very easy and user-friendly to purchase precious metals through the OneGold app, so I'm definitely going to be using it myself in the future for my precious metal purchasing. Not to mention, OneGold is also owned by APMEX, so they have a parent company there that is very well trusted among current precious metal investors. In addition, when investing with the OneGold platform, the metal is also fully audited by top 5 accounting firms in the US, UK, and Switzerland, or also the Royal Canadian Mint for Canadian. Using OneGold, similar to the cryptocurrency markets, you have the ability to buy, sell, and trade 24/7. In addition, there's not going to be any sales tax, which is something you're going to run into if you're purchasing physical metals. The setup is honestly a breeze, and it really just takes a couple of minutes to open up an account with OneGold. It's not the same as a brokerage account where they have to collect tons and tons of information. So if you guys do want to check this out, be sure to download OneGold via the sponsored link down in the description below. So since most people are going to be using OneGold as their gold investment platform, let's go ahead and talk about them in a bit more detail here. So OneGold is a pioneering online platform for buying, selling, and managing precious metals. OneGold believes that every investor should have the opportunity to own assets that fit within their set of needs. In addition, people who purchase US gold and US silver during this limited time offer will have access to immediate liquidity, 24/7 online purchasing and selling, and low-cost storage choices. OneGold has gained popularity from a wide variety of users, ranging from an account balance as small as $100 all the way up to $10 million or more. Now, another thing I really like about OneGold is it's all packed into a very easy to use and navigate app that is similar to other financial apps out there. It's also very easy to track prices of different precious metals within the app, so that is also an added benefit. So now what we're going to do is jump into the OneGold app on my phone, and I'm going to show you step by step how to purchase gold within the OneGold app, and I'll also be giving you a quick overview and tutorial of the entire app. Okay guys, so here we are inside of the OneGold app on my phone, and I have to say I really like how everything is laid out, and it really does remind me of a lot of these other, gigantic financial apps out there with a really sleek user experience. So I put $100 in here for demonstration purposes, and like I said, in the future I do plan on moving a lot of my precious metal assets over into OneGold when I do eventually sell my exposure through PaxG. But for now, let's start off at the top here, and you can see where it shows you how much in your portfolio you have of gold, silver, and platinum. I currently just have my $100 cash balance, so I don't have any metal holdings as of yet. If you scroll down here, you can see where they have that auto invest feature if you wanted to automatically invest in any of these precious metals on some type of recurring schedule. This, of course, would give you the benefit of a strategy called dollar cost averaging. Another thing I really like about this app is they include tutorial videos right in the app if you have any questions about how to actually do something within the app. So for example, they have an overview on how to buy, an overview on how to sell, how to use auto invest, how to redeem, and also a portfolio overview and many different helpful videos. If you scroll down, you also have a market news feed, which is going to include any relevant news articles related to precious metals. So if we jump over to my portfolio now, you can see that I have a 100% cash balance and 0% metal balance. And then you can jump over to the prices tab and get really nice charts for the prices of gold as well as silver. And in addition, charts for platinum, and you can also open that up over different spans of time. And overall, guys, I just have to say it's a very well laid out app, and this is where I actually do check the prices of gold and silver, etc., because I find it to be the most user-friendly charts. So now what we're going to do is click on the Start Investing button, and we're going to go ahead and buy US gold. So I'm going to go ahead and click on the blue buy button, and then what I have to do from here is click on Add Payment Method, and I'm going to select my cash balance since I already made a deposit. At this point, I type in the dollar amount that I want to invest, so I'm going to type in $50. Then you click on the blue continue button, and then you're going to confirm your order where it shows you basically the spot price that you are paying as well as any fees that apply. In this case here, there is no transaction fee and no service fee. So it gives you a 5-minute timeline to review your order, and then if everything looks good, you click on confirm buy, and just like that, I purchased, vaulted gold, which is pretty awesome. And then if you click on the blue button here in the middle, you're gonna have a number of options such as buy as well as sell. You can also deposit additional funds, withdraw your funds, or if you want to redeem your holdings for physical metal, you can do all of that right here within the app. So if you guys decide you want to check out OneGold, be sure to use the sponsored link down in the description below. Also guys, if you do plan on using OneGold, there are some coupon codes down in the description below that are going to save you money off of your very first purchase. So if you use code Scribner75, you're going to get $5 off a buy order of $100 or more. And if you use the code Scribner95, you'll get $100 off a buy order of $5,000 or more. Now, with these investing platforms for purchasing precious metals, there are going to be some cons to be aware of as well. First of all, you have to understand that your metal possession is not in hand, so you need to be comfortable with a vaulted solution. In this case here with OneGold, you would need to trust the parent company APMEX, which is the largest online precious metals retailer in the US with over $14 billion of sales. So in my opinion, this is a very trustworthy platform. Moving on here, let's talk about the third method for investing in gold, which is purchasing gold ETFs. Well, an ETF, or an exchange-traded fund, is a type of security that tracks an index, sector, commodity, or other asset. Now, the benefit here to an ETF is that it can be purchased or sold on a stock exchange the same way that a regular stock can be. Gold ETFs offer investors a great alternative option for gaining easy exposure to the gold markets. You will also find a number of different types of funds out there. For example, there's some that are simply tracking the underlying price of gold, where there's others that are actually tracking the global mining industry for gold. So for all of these reasons, gold ETFs have become quite popular in recent years. Starting off here, these are the pros of investing in gold through an ETF. First of all, this is the most popular way to buy gold and silver today, and you have very high liquidity, which means it's easy to convert that asset back into cash. In addition, there's literally billions of dollars invested into funds like GLD and SLV. Also, it can easily be purchased within almost any brokerage account that you have, and then you can view all of your financial assets in one place through one app in your brokerage platform. However, there are a number of cons with this type of exposure to gold that you should be aware of. First of all, it does require a brokerage account, which is a limiting factor for some. In addition, your ownership of the metal is in a trust, so it is not direct metal ownership. Next, there is questionable metal backing, so, whether or not there's actually metal there is something that you have to look into yourself and make sure that you have trust in this overall investment. Beyond that, liquidity to bank accounts depends on how quickly brokerage accounts send funds, and that can, of course, take a couple of business days. Another important thing to mention here is that ETFs such as GLD and SLV are seeing net outflows, or people pulling their money out of these funds, whereas platforms such as OneGold are actually seeing record inflows at this period of time. What you can discern from that is that investors are potentially losing confidence in these ETFs and are actually preferring to invest with platforms like OneGold instead. Okay guys, so now we're going to move on to the next type of gold investment, which is gold futures. Now this is going to be far less common for your average retail trader like myself and probably you. It's mostly going to be, larger institutional investors and hedge funds getting into gold futures, but nonetheless, it is good to simply be aware of this investment vehicle. So gold futures are standardized exchange-traded contracts in which the contract buyer agrees to take future delivery of a set amount of gold. So from the seller, a specific quantity of gold at a predetermined price is going to be delivered on this future delivery date. So gold futures effectively give companies involved in the precious metals industry a way to hedge their gold price risk on an expected future purchase or sale of gold. With an inverse relationship to dollar bills, gold futures help reflect the appreciation or depreciation of currency and also can enable profits. Now let's talk about the pros of investing in gold futures. First of all, you have the possibility for higher returns than simply holding on to physical metal. This in turn gives you the potential to possibly multiply your investment, assuming that you are placing the correct bet on those gold futures. In addition, futures employ leverage, so you are able to have leverage over your capital, which basically means you have control of a larger number of assets for a smaller amount of money. Through owning gold and metals futures, it is possible to take delivery of 400-ounce gold bars and 1,000-ounce silver bars. However, most people who own futures are not going to actually take delivery. They're instead going to sell that futures contract to somebody else, hopefully for a profit. So with gold futures, it is possible to make money from increases and decreases in price by going long and short. However, as with any investment, there are going to be some cons, and there are quite a few here with gold futures. First of all, this requires an understanding of futures contracts as well as margin, and this is something, again, that your average retail trader is probably not well versed in, so this isn't really the playing ground here for somebody like you and me. It also requires a brokerage account with margin enabled, which again is going to require certain levels of capital requirement, and it's again just not a territory that retail investors usually venture into. In addition, gold futures is going to require an understanding of technical analysis because you're basically going to be a short-term trader of gold. Typically, this is a solution for sophisticated investors, and sophisticated might not even be the best word. It's more of these just larger professional institutional investors. Not that retail investors aren't sophisticated. It's just that, these large investors, this is all they do day in and day out is trade futures. That's not what most of us are doing when we're simply investing on the side and doing something else to make money entirely. So unless you're going to be spending every day at your computer following gold prices, it's probably not going to be a territory for you. In the gold futures market, large players such as banks and hedge funds participate in this space, and they of course have tons more capital to deploy. As a result, the small retail investor rarely wins in the futures market. It's also possible to lose more than your initial account value when investing in futures, so that again is a major red flag and something you should be fully aware of before you remotely consider getting into futures. Also, many people lose all of their money when having a leveraged account with margin. That's just a given fact here, guys. So again, that's why I don't recommend margin. It is available, but most retail investors are not going to have success with that. So moving on now, the fifth investment vehicle related to gold to talk about is going to be mining stocks. So the mining sector is popular among investors as it produces a steady stream of both precious and industrial use metals and other raw materials. That being said, there are going to be a ton of risk factors associated with mining stocks that we're going to talk about shortly. So for that reason, I personally just do not touch this investment. So I just wanted to, disclose that to you guys here. Investors in mining stocks split the sector into two main groups, which are called the majors and the juniors. Juniors are going to be riskier ventures, most likely found in commodity exploration such as oil, minerals, and natural gas. These are very speculative investments here, guys, and it's based on them finding something in the ground and so many things working out in their favor. On the other hand, the majors are less volatile and also more mature and well-established companies that tend to have a larger portfolio of claims and capital cushion that they can use to finance further exploration. So what are the pros here of mining stocks? Well, there's really not too many to mention here. It is certainly possible for higher returns than holding a physical metal, but again, there is no guarantee about that, and it's honestly going to largely come down to luck in terms of, picking the right stock. Second of all, of course, there is that possibility to multiply your investment, but there's also going to be proportional downside risk to that upside. Lastly, you do have high liquidity through a brokerage account, assuming it's not a penny stock, so it is easy to buy and sell this asset. Now, on to the cons here. Aside from this investment category in general just being extremely speculative and risky, there's a few other cons to mention here as well. It is going to require a brokerage account, and you also may need to have access to international exchanges where many of these companies are traded. So you will be delving into likely the over-the-counter markets, which don't have nearly as much oversight. So that's another thing just to be aware of and to be careful of. Second of all, an investment is often an investment in a management team and less so an investment in the precious metals itself. So that's another thing to be aware of as well. And then lastly, investment returns may not be correlated to gold and silver prices. So even if gold and silver prices were going through the roof, if you picked the wrong mining stock, you could be down tremendously because you're not going to actually see that same correlation, largely because you're more so investing in the management team behind that company, not so much the underlying precious metals. So now let's cover some general gold investing tips here for you guys. First of all, if you are going to use an online investment platform like OneGold, for example, you are going to want to thoroughly research that platform. I personally trust OneGold because the parent company APMEX has been in business for multiple decades, and I've transacted with that company in the past to buy physical gold bullion and silver. I actually didn't buy a lot of gold. It was mostly silver at the time. I might have bought some very, very tiny pieces of gold many, many years ago just to say that I own some. In addition to that, if you are going to go through a gold dealer, you're going to want to also, vet that individual and also figure out what you're paying as a premium above that spot price. And the other thing to consider as well here too is keep in mind taxes, sales tax that might be associated with different methods of purchasing gold. In general, you're going to want to conduct due diligence to ensure the premiums, management fees, etc. are not too high, because that's literally just money out of your pocket that you're not going to get back. You're also going to want to understand the selling process and price to ensure the spread is favorable and the product meets your liquidity requirements. So it's one thing to buy an asset, it's an entirely different thing to be able to then turn around and sell it. So you want to be fully aware of what that process looks like for getting your money, back out of it and back into cash. Lastly, you're going to want to understand any counterparty risk if there is any. An example here of that counterparty risk would be if you were investing in a gold ETF, but you were suspicious of whether or not this company or trust actually had these underlying precious metals holdings in the first place. Moving on now, here are the overall pros of investing in gold. First of all, it has proven to be an effective hedge against inflation in the past, and with the crazy inflation numbers we are seeing right now, that is why I have personally, ramped up significantly my exposure to gold. Second of all, it has been proven to be an effective portfolio diversifier and can even lower the overall volatility, of your portfolio without sacrificing returns historically. In addition, it is a tangible asset with a fixed and limited supply. So if you don't like the fact that the Federal Reserve can just turn on the money printer at any point in time and invent or create new money, a hard asset like gold has a very fixed supply. We can't make more of it, so that makes it a finite asset. In addition, gold has low correlation with many other assets, and gold usually performs well during a recession. That being said, there are a few cons here to be aware of. First of all, gold is non-yield bearing, similar to something like Bitcoin, where the only way to make money from it is holding on to it after you bought it and then selling it for a higher price down the road. There's no way to earn dividends, for example, from your gold. Second of all, there are insurance/storage considerations to consider. If you plan on holding on to your gold yourself, you have to have a very well laid out plan that you don't share with other people. Otherwise, someone could find out where your gold is if you buried it in the woods, or if someone found out you had, a safe. That's just not information that you want people to know. So that could also be something where, that comes with some stresses associated with all of those different things. Finally, depending on the platform you invest with, there could be high fees used on that platform, and that again is just money out of your pocket. If you are concerned about those high fees, you could of course invest in gold through OneGold, which has a highly insured auditing in addition to low fees compared to other platforms in the industry. So finally, guys, we're going to wrap up here with should you invest in gold? And honestly, in short, it all depends. Certainly from an investing perspective, it provides a lot of versatile and diverse potential profits for your portfolio regardless of net worth. Also, in the past, it may have been difficult to get exposure to gold if you had a small amount of money, but with platforms like OneGold, it makes it way more accessible for smaller investors. Gold allows for great diversification and leverage in the market, especially with the implications of either inflation and depreciation in the dollar bill or even the stock market. Honestly, guys, the inflation numbers are definitely scary to me, and I am personally very happy that I own the gold that I do now. The last thing I want to end with here, and it ties in with that quote earlier on from Ray Dalio, it's the fact that investors today, many people out there my age or younger, that have yet to see a prolonged bear market may not truly understand much of the value proposition behind gold, but as we know, it is going to be the case in the future because there is going to be another prolonged bear market at some point in time, and perhaps that may be the point where you understand, okay, this is actually why people invest in gold. But anyways, guys, that is going to wrap up this marathon video. I hope you enjoyed it. If you did, make sure you drop a like as well as leave me a comment down below below with your thoughts and feelings. If you do want to check out OneGold as a gold investing platform, be sure to use that sponsored link down in the description below. And in the future, I plan on moving my holdings over to OneGold rather than having exposure through cryptocurrency, just because I feel more safe and secure using a platform that is, backed by APMEX. But thank you guys so much for tuning in. I hope you enjoyed the video. Be sure to share it with a friend or family member if they may be curious about investing in gold as well. And as always, I hope to see you guys in the next video.